transaction volumes rising. How do we put this in context?
Yeah, it seems odd, right? Record transaction numbers, so the strongest June we've had in the second strongest ever, ninth strongest transaction month by far, right? So we're looking at all those prior to that, those other 8, they're from early years back 2009, 2010, 2011. Massively strong transaction month, yet prices declining. Not unexpected. The last 3 months we've seen a slowdown in price appreciation, right? And this month seeing it just dip into the negative. So it's not necessarily unexpected, and I actually think it's a good thing. So this is our second decline that we've had in this current market recovery. Actually, we're not even in the recovery anymore. We're now into an expansion phase. So it's the first one we've had this year. It's the second one in the 20 months of this cycle that we've had. And I expect we're going to start to see some more tapering off to the market and slowing down.
Do you want to talk us through those 4 cycles that roughly make up a property market?
Yes, yeah, let's do that. So if you think of a sound wave, right? So you've got a wave, nice easy wave with the top, you've got a peak, and then you've got a valley at the bottom. So we break that down into 4 cycles. The easiest one to look at is that bottom of the market, the bottom of that wave. So when's the best time to buy a property? It's right at that bottom of that wave. But you never know you're there until you're past it, right? So what we see in that is the recovery phase start. When you're about, say, a quarter in, so 3 months of positive price appreciation, confidence comes back. People are like, we're past the worst of it. That's when people come back into the market. Prices have that big bump that we saw, say, 18 months ago or so, and prices start to appreciate. And then you start to see developers come in and launch more inventory into the market. And this nice growth, this recovery, things keep ticking up. We might see some ebbs and flows, some ups and downs. The next phase is expansion. And that's when developers really start pushing more into the market. And then you start to see smaller developers come in, which we're starting to see now. Ultimately, this leads to, in every market, hypersupply. Right? That's when the market has too much inventory coming into it, demand starts to wane, and then we start to get into this plateau and then a downturn into the one that one likes, the recession phase. But this is natural. Every market in the world goes through this cycle. Where are we now? We're in that expansion phase, and we're probably starting to get very close to the crest of that peak.
Which would bring us into hypersupply. Tell us what we have seen in June when it comes to new stock coming on.
I would say, since we've been tracking data, an unprecedented amount of stock coming in, right? So new inventory, new development launches last month, over 5,000 units, about 5,200 units, 13 billion in volume, right, in value. The entire year, we've seen about 21,000 new units come on. So in 1 month, 5,000 units. That's a lot of units coming in. Right? Typically, we probably see closer to 10 to 15,000 units being launched a year, right? So now we've got a lot of new units coming. You've got them from the big developers and some of the small ones, and some are being very strategic where they're coming on, which is what we want. We want supply to be measured. We want supply to balance where the demand is now, but also they need to predict where it's going to be in the future, not just for their sales, but handover in 2 to 3 years' time.
Is that why the prices are coming down, because of the new supply, or is it more complicated than that?
Yes and yes. So the ready property market, and particularly the resale element of that, has had some of its best growth. And now you're starting to see that growth slow. You gave an example earlier this morning where someone was 2.2, and then they came down to 2.1. Seeing that in other communities as well. The resale market rapidly appreciated, right? Prices have sort of topped out in a lot of these communities. Developers are very strategic in what they're launching. They're launching at price points that make it very favorable to wait a couple of years to take that unit on. So you're seeing more in that affordable side. I'll contradict myself. Last month was also probably the strongest month ever for the ultra luxury segment. So if we say on a percentile basis, probably the 97th percentile and above, stuff that's in the 3,000, 4,000, 5,000 dirhams per square foot range, that ultra luxury segment, biggest launches we've ever seen.
So what does this dip in prices mean for maybe heading towards a bit of stabilisation, that elusive market maturity that we keep talking about? Yes.
We want to see this, and it's what I've been harping on about for probably the last year. Prices ran away. It was great. We had this bump. You saw 2.5% appreciation month on month. Fun, right? But we want to see that taper down to exactly what we're seeing now. To put it into contrast, the last recovery cycle ran 24 months, right? And towards the end of that, it was hitting 2-3% month on month appreciation. We're not seeing that now. We're 20 months in. If we see this small and stable and month on month, it's sensible price growth. It's things where people can afford to go after it. Right? Affordability is one of the things that's really going to start to come into the market, especially in the mortgage side of the market. So one of the other things that we highlighted in the report, a big jump for mortgages, right? Mortgages were tapering down, and now we've seen about 2,300 mortgages last month. The interesting part about that, though, is we had the Fed rate increase, 75 bips, 75 basis points, and then we saw the week after that, mortgage transactions spike, right? They went up to probably their highest in 9 months on a weekly basis. And then the weeks following that, they've been tapering down. Today and tomorrow, there's an FOMC meeting, right? And we're going to see another rate increase. What's that going to be? My money is going to be on at least 75 basis points, more than likely a full percentage point. And that's going to have an effect on what happens in the market here.
Is it if the last one didn't?
Oh, it did, right? It had an effect. So you had this bump straight after, it was a 1 week bump, right, that drove that increase, right? And now then it's been tapering off, tapering off. I don't anticipate another bump, or if it is, not as big as the one we just had. And I think you're going to see additional increases coming, potentially tapering off towards the end of the year to maybe they go down to 50 basis points, 25. But rates are going up, and it all goes back to the US inflation story.
So what is this likely to look and feel like on the ground, Zhann? Not just for those looking to buy, but also those looking to sell?
So if you're looking to sell, what I think the example you gave earlier is a seller's got the right to go out and try a price point. The quicker they react to the market on that price point and lower it if they need to, the better. So if you're a seller, that would be my advice to you. If you want to test a price, test it. But if you don't get offers quickly with it, then you need to lower the price. If you're a buyer, you really have to weigh up your options, especially if you're a mortgage buyer and those monthly payments coming in. I think the last time I was on, I said lock in a fixed rate as soon as you can, 3 to 5 years. Still the same advice. Lock in the longest fixed term possible. If you're someone that's looking in the off-plan segment, now is a good time to buy. There is so much product coming in, but it's also going very fast from the big developers. Some of the big developers are launching a project, and in a day or two, inventory's gone. Right? We didn't see that for probably 5 or 6 years. Small developers taking a little longer to move that inventory.
You've been in this market for a long time. We've got about 40 seconds left with you. How long do you see this current phase lasting? What kind of timescales are we talking?
It depends on a few factors, right? The wild cards that come in. Inflation, rates, supply. One of the biggest things that I'd be watching now is supply. I think what we're going to see is over the next couple of quarters, prices to continue what they're doing now, slow and taper down, some small positive, some small negative months. I think that boom part of the market, we've passed that big boom. We're now going to go into a sense of maturity and slow down and potentially see this positive side of the market run for another, say, 9 to 12 months.
Zhann Jochinke is the COO of Property Monitor. That new report due out today, running us through the facts and figures for it, including the fact that June has seen the first drop in property values, residential property values, so far this year. Thank you very much for joining us.